I am failing my prop firm challenge, guys. It is not going well, but I've always said on this channel that transparency is super important, and I'm so tired of all the trading influencers lying about their challenges. So I am going to show you exactly what's going on and why I'm failing. You can see here that the 100K prop firm challenge, it's a one-step account, so the max drawdown is 6%. I'm down 1.33%. So it is not deadly just yet, but we're certainly not tracking in the right direction. And you can see all the trades here. So I had basically a break-even trade on pound CAD. We had an 0.8% loss on pound yen, and then a couple of trades on pound New Zealand. So overall, not going well. But I want to break down the trade setups that I'm looking at, where the opportunities are, and then most importantly, in terms of helping you, I want to show you why the market is moving the way that it is. And so we're going to break down everything that's going on in the news. So let's get rid of all these negative trading results. Let's see what's actually going on in the market and the trades that I'm looking to take. Pound CAD, I love trading pound CAD. There's usually some really good opportunities. However, as we'll see as we scroll through everything, the market is trending like crazy. So we had PPI come out this morning, which again sounds super boring, but it's actually really important. It came in lower than expected. So it's an inflation measurement. Remember, if inflation starts dropping, the Federal Reserve is going to be more confident in cutting interest rates. You can see here an unexpected 0.1% decline. And now on Poly Market, really fascinating in terms of a September rate cut. There's now a 16% chance of a 50 basis point cut. That would be insane. If the Fed comes out and cuts 0.5%, that would be huge. But it looks like we're almost fully priced in, 81% chance of a 25 basis point cut decrease. And that's why the entire market has been rallying like crazy. You can see here, Bitcoin is up 2.3%. So we're seeing a really nice move to the upside. Gold, I mean, we'll talk about gold. Insane, 36.50, absolute insanity. Pound yen up 0.2%, which really shows, we're in this risk on environment. The yen is selling off. S&P up 0.3%. NASDAQ is up. The Nikkei just recently hit an all-time high. Coinbase is up. Basically, everything is up because everyone is confident that the Fed is going to be cutting interest rates. That's what you need to know. If you didn't pay attention to this news and you just started to short everything, you lost a ton of money. So that's why you need to be paying attention to this stuff. In terms of trade setups that I'm looking at, because everything is rallying, if you didn't get into trades earlier, it's going to be really hard to kind of, pinpoint where to enter. I want to talk about consolidation because if you are feeling confused with the markets, with the charts, there's a good chance that the market is also confused. You don't need to be operating. I mean, I'm feeling my prop firm challenge, so don't listen to me. But you don't always have to have perfect clarity on what's happening in the market and what's going to happen. And when the market consolidates exactly like this, actually, you can't see a single thing that I'm sharing because I wasn't sharing my screen. So pound CAD, we have to show you the resistance here. Boom, this resistance here. I don't like those types of trades. So on the 4-hour chart, we need to have some sort of pullback, ideally down to these moving averages would be ideal. Back to pound yen. Now you can see all of this sideways consolidation. This sideways movement is because the market is confused. The market needs clarity on what's going to happen next. So if you don't know if you should be buying or selling because the market's moving sideways, the market's moving sideways because it also doesn't know and it's waiting for some form of clarity. In this case, likely the Fed interest rate decision. So I prefer when there's a lot of clarity. I prefer when the setups are clean, when you don't have to spend hours finding them. So pound yen, nothing coming up just yet. If we look at the 1 hour, also nothing really that interesting, just a lot of choppy movement. Pound New Zealand, another nice asset to trade. This was the pair where I almost took a trade and it has the best potential setup, but I want to show you this setup because it can often make the difference between making money and just losing trades. You can see here we have this really nice high time frame fib. This is a daily fib, and we've retraced to the 50. So we had a nice drop, we had a nice bounce from the 38, and now we're on the 50 along with this moving average, and it is a nice support level. So I would think, okay, let's take a market order, let's set a pending order, let's get into this buy because I think we could have a nice bounce. Your thinking would not be wrong. However, the move has already taken place. If we zoom in here, you can see that even though we didn't touch the fib perfectly, we came super close. We came within 7 pips, and then we rallied 73 pips. Okay, then we came back down, we actually hit it, and then we rallied another 47 pips. So this trade idea was perfect. However, I wasn't watching it, which is why I did not take the trade. And to be honest, I probably wouldn't have taken this trade because we came so close to hitting the area here. And that's really what can make the biggest difference between having winning trades and losing trades. Using a zone when it's already been used just increases your odds of having a losing trade because the move has already taken place. Gold has been doing some crazy things, and I want to pull up this article, or this tweet actually, that was shared in Pip Munch, a free daily email newsletter. We break down the markets. 25,000 traders receive it every morning, completely free. You can subscribe to that down below. Gold is doing some interesting things. Take a look at this right here. Gold is breaking through its inflation-adjusted peak from 1980, a level that stood untouched for 45 years. Moves of this magnitude don't happen in quiet times. They usually mean the market is sending a signal that confidence in the existing monetary framework is eroding. Back in 1980, gold exploded higher after the U.S. left the gold standard. That was 1971, I think, when Nixon removed the U.S. from the gold standard. Inflation ran hot and trust in paper assets collapsed. Today's rally rhymes with that history, but the drivers are different. This time, it's a toxic mix of ballooning U.S. debt and deficits, questions around Fed credibility, geopolitical fractures, and record central bank buying, especially from emerging markets trying to reduce dependence on the dollar. That central bank demand alone sets a structural floor. When gold moves this far, this fast, it usually signals deeper stress under the surface. Either investors are bracing for more inflation down the road, or they're looking for shelter from a loss of trust in traditional anchors like treasuries and the dollar itself. Remember, the dollar is down over 10% year to date. Gold doesn't just rally because people suddenly like shiny metal. It rallies because confidence in the system is slipping. Well said. This is crazy. Inflation-adjusted spot gold price after 45 years has returned to its high to where it was previously. But remember, the official inflation gauge is a total scam. So it's actually way higher than they say. So that's really interesting. And again, it's something that we need to keep in mind when trading, right? Why is gold rallying? It's because of the relationship, the inverse correlation that it has with the dollar, and the dollar has been getting destroyed. So gold, Bitcoin, especially long-term, I'm very bullish on Bitcoin, and many think that it's only a matter of time until Bitcoin catches up with gold, that gold is moving first and Bitcoin will rally accordingly. And I mean, Bitcoin's having a nice day at $114,000 when it had dropped to about 107. So that's a nice little rally there. Speaking of Bitcoin, there could be a potential short, not that I'm interested in shorting it, from this guy here, the 38 fib. We came close, but we're getting maybe a slight bounce there. In terms of gold, again, you can see where I originally had drawn the fib, hoping for a retracement. We have now broken way through that. So this is now the fib, and we need some sort of retracement. Aussie yen, again, we need some sort of retracement. So on some assets, on some FX pairs, we have a lot of clarity. The market's rallying, but on others, we're really not getting any sort of movement whatsoever. So overall, my prop firm challenge is not going very well, but I'm going to continue to update you guys accordingly. If you have any questions, hate comments, you name it, drop them down below. I'll see you tomorrow. Peace.